Hi everyone, it's January 10, 2022, and you're watching Awesome10X Investing channel. Today we have four guests, well, three guests. We have people from Las Vegas, Cancun, Mexico, and Washington, D.C., aside from me, Manila, Philippines. And we're just here to talk about the markets. Before we begin, maybe I'll ask each of them, starting with Martha, then Jeff, then T, to say something about themselves as well as perhaps like just what you like maybe just one sentence about what you do and what you think the markets will do this year. That's all. Go. Okay, go
Well,
Martha.
hi,
I'll do the last.
how, hi. My name is Marta. I live in Mexico, in Cancun. And what do I think for the markets this year? It's going to be a really bumpy ride. 2021 was a really easy year for investing because everybody was bullish. Everything was going up. Thankfully for me, I started that year. If not, I had just lost a lot of money. But I learned a lot. And what is most important for me is that I learned that this year is going to be very difficult with all the inflation rates and hikes coming. It's going to be a tough 2022, but I think that focusing in great companies is always a good thing to do.
Okay. Let's go with Jeff. Go ahead,
Yeah.
Jeff.
Hello, everyone. I'm Jeff. I work in esports, but regarding the markets and what I think is we had price to earnings multiple expansion, and with the Fed and central banks around the world starting to see unemployment rate reach, below 4% in the U.S., for example, that gives the go ahead to start raising rates. And with inflation, as we all experience with gas prices, food prices, and all that, prices are going up. It's real. It's happening. It's not transitory. So that means we have a more hawkish Fed, and we're moving from an era of quantitative easing to quantitative tightening, which means liquidity will be pulled out of the markets. We lost $1.8 trillion the past week in the global stock markets. So that's a sign of things to come, and it's the beginning of a trend. As you know, you want to ride the trends up or down. So I see basically the PEs of like SPY is normally around 18. Forward earnings we're sitting at around, I think, like 22, and for Nasdaq it's sitting at 28x times forward PE. And normally when we start mean reversion, we get down to about the 20 range. So we have a lot more to go. So basically, a lot of the small caps and high tech growth stocks that we love, they lost an arm, a leg. Well, there's another arm, there's another leg that they can lose on top of that. So that's kind of my thoughts so far overall.
Okay. Doc. Doc.
Yeah, so I'll kind of take the middle view. I think that within in the next few months, there's a very strong possibility to see some form of a melt up. I don't know when and if that's going to come. It very well just maybe continuing to bleed out in a bear market. But I think I'm kind of more subscribed to the view of that. I think we'll have a continuous little meltdown here, choppiness, but going down up until the Fed actually raising rates. And like they're coming out and like we're doing this, it's happening tomorrow, sometime in March or spring or something like that, and that could potentially signal some kind of contrarian bottom where we go up, and then you kind of have like the actual continuous rate hikes that come throughout the next year, that puts us in a bear market. So I'm kind of like somewhere in between there. So I kind of have my spidey sense on in terms of like there's going to be a melt up. I still think that there's going to be a melt up at some point, and so yeah, that's kind of how I look at it.
Okay, so last would be me. Yeah, hi everyone. So my name's Nikki, and just to summarize, I think like 2022 is a choppy year. However, I think that everyone is very bearish to the point that they may have priced in. Like personally, I think they may have priced in a huge negative already for many growth stocks. So I am siding more with Doc T that we're probably gonna have some sort of melt up at the very least one of these months. I'm not sure if it's first quarter or second quarter, or if it's like that, like later stage. But there will be some companies that will repeat a great number this March. I think it's around February, March. They'll report earnings season. I think like some names like CrowdStrike. I mean, there are growth stocks that have been punished, and I think like some of them could just go up. Probably not all-time highs, but there will be some squeeze happening, even if everyone's so bearish. And I'd say that, that's just me for 2022. So I know it's a harder year. Everyone's very bearish, but I'll try to be the bull. I'm always a perma bull anyway. So yeah,
Long-term bull.
disclosure to everyone,
Yeah.
we aren't financial advisors. All four of us aren't. So anything you hear or I don't know, anything you watch will just be our own opinion, and just know that that is just opinion. All
Just
right.
ignore
So
just ignore everything I say right now.
yeah, so it's just opinion. All right. Let's give some like wide ranging topics, and anyone could answer for this. I have a question. All right. So Jeff mentioned like a lot of inflationary pressures. It is here to stay. I mean, it's a very long, like winding question, but everyone's already punished Cathy Wood and Chinese stocks. Can we give like just one word what we think for 2022 will be? What would like change the narrative with China and Cathy, or will it just be an entire ARK bought another sell-off? Like you think after like last year's sell-off, it will continue to sell another like huge downside? Anyone wish to answer that? Cathy Wood stocks and
Yeah,
like,
I think with if you look at ARK's chart, you look at the 30 EMA is very important. They're in a stage 4 decline. If you look at like stage 1, 2, 3, stage 4 it's a clear stage 4. It's broken a lot of like major supports on the weekly. So it's important to look at the weekly because that's where you see institutional footprints. If you look at ARK, they kind of were pretty, sold off. I think they're oversold right now, so we'll probably see a bounce. But I anticipate, and don't quote me, or you can quote me because I'm going to say it
Norris.
live. But I
Norris.
think ARK will fall
I'm trying
to
to
about $55. Like they're going to fall to
$55.
$55.
All
Yeah,
right.
the reason
Sure.
being is because a lot of growth
We'll reset.
stories can change. So if like they're priced to perfection, like Net and all these companies, as soon as they have one earnings, like Piton had earnings where they basically guided down and said they're not going to make as much revenue and so on. As soon as they have any of these growth stock have any type of these earnings revisions, their entire narrative changes, and then you will see these massive drops in their valuation. So that's why I'm just cautious because we don't know what will happen in 2022. Of course, inflation looks to be stabilizing. We could see peak inflation, and then if that's the case, then we could see like a very strong short-term bull move up until inflationary pressures come back. But the Fed is not going to switch and basically wait to raise rates. They're looking to raise rates sooner, and they've kind of communicated that from the FOMC meeting. So that's why I think with ARK is long term they're going to be in great spot because all these companies are very cash rich, like Shopify and so on. It's just the higher interest rates don't favor these higher beta stocks because it's not a safe place for capital to stay in for the time being when rates are rising.
Okay, good take. Just as he mentioned ARK, I'm showing the weekly chart. So what Jeff is saying, somewhere here, 70% decline would be about 50 to 60. So he's looking at a range of about 55 before you pick up growth stocks. That would still be around 50% downside, roughly speak. Well, about 40% downside. So that's a huge downside if we're gonna like try to bottom out there versus current levels of about 80 or 84. Although he did mention we do have a chance to bottom out here. If we're gonna bottom out, just from a chart wise, an ARK, there will likely be some bottom fissures here about $80 before we actually tap. So maybe 79. These are the weekly charts. We'll have a tough problem somewhere about 96 all the way to 100. So either we go sideways and then crash all the way, or we just crash now and then, yeah. If we crash now, then that's a huge leeway to go down. It's like if it's gonna break this 79. Anyone has a different opinion on ARK, or is everyone of the belief that it could crash hard, like what Jeff thinks? You have a different opinion, say Doc or Martha, or you're also on the thinking that careful and a 50% downside is possible here.
So I can give you my kind of take on it. You know, I think the original thing that you asked was, you know, putting China in ARK in the same basket, and I don't think I would go to that place.
Okay.
I think there's a value level there that is completely different,
Okay.
and I'm actually of the opinion right now, and I'm actually pretty bullish on China, because there's just so undervalued, and you do have companies that are making a ton of money that are undervalued. So I think there's going to be a nice contrarian play with China compared to ARK.
Okay.
So I guess I wouldn't put it there. But I guess the one thing that I would say is the mindset that I kind of look at it is, and Jeff or Nikki or Martha, you can kind of tell me what you think. I've spent a little bit of time like looking at like accumulation and distribution, and those things generally happen over sometimes years at a time. And so when I kind of look at like that ARC chart, when you're talking about it coming down to like that $55 level, I don't think like you're gonna have like it hits 50 and then it like just skyrockets up to new highs. You're probably gonna see like this very Wycovian accumulation period over several years while this liquidity leaves the market. And so now I've kind of shifted into this mindset of I'm going to try to accumulate at those bottoms, which is likely to be, you know, it's probably going to ping pong, you know, anywhere from like 50 to 100 over like the next few years. And your job right now is, am I going to hit this thing at the 50 level? Am I just going to dollar cost average in? Knowing that in a few years, this is where I want to be. So I guess that's kind of like my mindset with it. And I know it's like a different mindset in terms of trading it versus, you know, just trying to, I kind of look at it like I'm trying to be a whale, pretending like I have billions of dollars or whatever, even though, you know, it's not that much. But if I can hit that and I can accumulate something that I believe in my heart is going to be like a super valuable asset, this is what, you know, this is what you do. You try to buy it at the bottom. Yeah, it's going to go up. I think it's going to be several years though. Yeah.
Yeah. Anyone
Yeah,
going on China? Like Martha, what do you think about what Doc just said?
Well, I fully agree in the value of of some China stocks. For example, BABA and JD, in my opinion, are right now like value plays. Of course, there's a lot of fear surrounding China and whatever new information or whatever new stuff happening there. But I fully agree that it could be a value play. To be honest, I'm not playing in China right now. But and regarding ARK, even though I really like the narrative and I am a really bull of Cathy Good long term, I think 2022 is going to be very, very tough for all the ARK holdings. Even if you wanted to hold it as an ETF or individual stocks, I don't think that it will be a good year to start picking it, unless, as Doc just mentioned, you want to start accumulating it and nibbling a little from time to time. But I think that this year it's more, you have to focus more on the cash flow generation of the companies. And of course, all the narratives that Cathy Good holdings have are, like Jeff said, like value to perfection, and they're forward looking. So it will be a tough year for Cathy Good's hold. I know that 5 years 5 years from now they are winners, but 2022 is going to be difficult for them, I think.
yeah, and I listened to Kathy's YouTube videos that she put out this past weekend to talk about the sell-off and the drop in the Nasdaq, and she's incredibly smart, and she's absolutely right. One thing that she said I took notes on is like incumbent car companies. This is a perfect example of like why innovation will win long term. Is like GM and Ford will start to have a decline in sales, right? Eventually, like GM, for example, they're down 43% for the quarter. Like Toyota just overcame GM as the largest like auto sales manufacturer in the United States, and she said that that's when Tesla and then all these innovative startups and companies will get priced properly, because once you start losing money your PE is infinitely zero, right? So you have no price to earnings because you're literally not profitable. So I think in the short term she's gonna feel a lot of pain. But like Ty and Martha said, I agree 100%. Like long term, like once it bottoms, I'm gonna go into ARK and go long because these companies are making cash. They're very profitable. And another thing I want to add too is what Kathy misses a little bit. And of course, I'm not as smart as her, okay? So I'm not trying to criticize her. But the reason why the mega caps were so like holding up the indexes because funds, there's a lot of money, right? There's trillions of dollars. They have to put cash to work somewhere. And the high beta stocks are too risky, right? Apple, Google, all these mega cap companies, they're just like cash. They're literally just like cash. Like you literally have to put money somewhere. And that's why like Apple went from 1 trillion to 3 trillion. Like that's crazy how much money just went into one company. That's because the funds know that they have to put money to work. They can't just sit on cash and do nothing. And the safest place to put that cash is in these mega cap companies that are literally, you know, doing stock buybacks, doing good dividends, and they're just so cash rich. And they're low beta. Their price doesn't move that much. So that's why you see them kind of, you know, holding up the entire markets while small caps and growth stocks are just literally declining 50. Some stocks like small caps are getting killed at 80% from February 2021. So that's important to understand just the macro aspect of that, and how the Fed and central banks play a role. And I feel like Kathy didn't talk actually anything about that, which is surprising to me. She's more focused on the fundamentals long term, so she'll win long term. Like in 5 years, if that's the measuring stick, then she'll be fine. It's just in the short term she's gonna face a lot of headwinds.
Yeah. So I've been seeing like Jeff, I've seen like you're advocating more the energy, financials. Well, it's been very strong like last year, XLEs, XLFs, and I'll show to everyone the chart here. So XLE has actually done very well, significantly over a week's time, like especially for the first trading week of the year. You're seeing 56 hit 61 for energy. That's XLE. I'm sharing the charts here. Actually, like Doc T has been pounding the table since last year on the energy names. And just from a chart perspective, XLE does have some buying power, a lot of buyers here about 55, and then perhaps some selling pressure here about $70. That's still a huge range to think about for this 2022. Are we bullish on XLE or like what's everyone's like what are you bullish upon for this 2022? Maybe I'll go ahead with those two ETFs first, XLE and XLF. Anyone here who's bullish on those names? I think Jeff is. Are you? Am I right?
Yeah, because I'm following the economic expansion, economic contraction cycles. So if you look at like when the economy is expanding, right? When we are like at the bottom, tech stocks and high growth stocks do really well because the Fed is going to accommodate the market. They're going to keep the Fed funds rate, you know, close to 0%. Interest rates and the cost of servicing your debt is very cheap. So growth stocks, small caps, they excel. And in a high interest rate environment, we start to see economic contraction. You know, that's just the fundamental macro narrative. And what does well? These banks are sitting on trillions of dollars of deposits, right? And if they just move a couple basis points in the Fed's fund rate, they basically their business literally is to sell loans and then make money off and arbitrage the difference between the Fed's fund rate. And the Fed fund rate is going to increase with their raising rates, and financials are going to do very well. But that's like literally the like financials will start to peak, utilities as well, because when inflation hits and higher rates, like people have to pay utilities, right? And utility companies are, you know, you're going to pay your utilities no matter what. So that's why you see like XLU, XOE kind of rising. And then basically what happens is that's kind of the towards the end of a cyclical economic bust and boom. So now that the Fed is starting to pull the punch bowl away and dry up liquidity, like you know, tapering and all this stuff, we're going to see a kind of a price, you know, valuation update. What I said earlier was a price to earnings multiple contraction until it reaches the point where it's completely oversold. And then I think we're going to have a nice big rally because after a Fed taper, the market will just resume its uptrend. We just don't know how low is low. That's the only thing. So.
Are you both subscribe? I mean, is anyone here subscribing to the 70% decline of what Jeff is saying, like the 70% potential downside? Just like from current levels, if it's gonna hit about 55, you're looking at about a greater than 50% downside. Anyone here thinks that's overdone, or like that's just to be prepared for?
The reason why,
Um,
real quick, before add before they respond, is the reason why I'm saying that because the options flow is 80% puts. Like the put premiums are 80% against ARK. So like everyone, smart money is betting a really hardcore against the ARK ETF. So we could see like a short covering too, but the put options that are 500,000 or higher are 80% puts. So 20% call. So that means that smart money and people who have a lot of money are very bearish on ARK for in
okay.
the next few months. And based on the price points, I'm looking at $60 to $55 is what
Okay.
it's probably going to hit just based on the options flow. So
Yeah, that's fine. So that's like
And I
significant.
think that kind of fits into like with the narrative of like we see a melt up and then potentially see like a 70% decline from there. After the short covering happens and then you start really seeing like that downturn after that. Because it could go up to, ARK could go up to 100, 120 and then just melt right back down.
And go down. Yeah.
Yeah.
it's going to do like a bell curve. Like it's
Yeah.
like the stage
Yeah,
4
yeah,
bell curve.
I get it.
Because there's
Okay.
I always have in the back of my head too, there's a ton of liquidity still out there. I talk to a lot of people, they're on the sidelines. As soon as Evergrande or whatever thing happened, they just, even people from the beginning of COVID, they've sat it out, and they're looking for a correction, to happen. So I think at some point, if we get a little bit of a correction, you're going to see a lot of that money come back in. And then you could potentially see that, and then you have like that big decline. So I guess, I'm probably biased in that regards.
Yeah. What do you think are the indicators for you to actually deploy your cash? So a lot of people would have some bottom fishing indicators. Like for others, they'd have to wait for Tesla to crash 25% below. The
Mhm.
FANGs have to be below 20% from current levels. Is there any level in the NASDAQ or something that you are watching? Is it an interest rate number that would, get you tempted that perhaps the market's already bottomed because of this, etc.? So I can see that everyone's bearish. Most of the people are bearish. What would get you, at the very least, look into bottom fishing the market, aside from a 70% decline from the highs for growth stocks?
Yeah, I think I kind
For
of go
any
back to
stock.
like that Wycovian, accumulation
So
chart
you'll wait for
patterns that I'm looking at. So we hit a
consolidation.
bottom, and then we clearly get right back up to like that point that we puked at. So, if we're at 70 right now for ARK, it comes down to 50, and then we come right back up. We hit that like that 70 mark again where it puked at, doesn't reach that supply point, and then it comes back down. And so I know like at one point if we're hitting like 2 or 3, once we start range trading, I think with a lot of these high growth and overvalued names, once you start seeing like a year's worth of range trading, I think then you could probably be confident in bottom fishing. But I mean, if you're trying to knife catch now, you really have to do it at lower time frames, and that would be kind of like the way to go. I'll just say one piece, and then I'll move aside.
Sure.
You talked about the XLE because it's kind of an area I really don't go down like the financial kind of part of things. I really just try to keep my brain focused in one area where I can concentrate and understand it. And for me, I really see energy in sort of like this very clear supply and demand dynamic. And for me, that's very simple to understand. We shut everything down, and I don't think the full repercussions of like that, we're starting to see that. We've already seen that in the supply chains in everything. And energy is the life fuel of everything. So no matter if you're looking at it from like, if you're just trying to play the prices of oil or uranium or propane, whatever, all those things have been shut down. They've all been shut down. And you're talking about one of the biggest cuts in supply being produced ever in history, right? So, and now coming into, this I don't work for the CDC or anything like that, but I do think in a sense, I think there's an analogy there that we're starting to see a little bit of a blow off top in terms of COVID. Everybody pretty much, I mean, I don't meet anybody who doesn't know somebody who hasn't had COVID recently. And so we're really starting to see this in the US, and so that's where you start really getting into like that herd immunity sort of environment and really sort of distilling out the impact of COVID. So to me, what that means in terms of energy is that you're going to see this huge surge in demand, right? So you have this tremendous, I mean, I just see it so clearly that you have this supply demand gap that is, there's no other way than price going up to meet the demand that's going to come, because it's not ready. Like you have uranium producers that have been offline. You have people buying up supplies and commodities all over the place. So that's kind of like, in my head, I can see that easily. I know like the financial aspect of it, and you really have to be very savvy and bob and weave out of like those financial plays. But to me, like there's a much more clear secular bull market in the energy sector. I think we're going to see like astronomical oil, whatever prices, and a lot of these producers like Schlumberger and Halliburton, like OIH sort of basket. I think those are going to, now they're going to have to start coming on and producing, right? So you're going to start to see a boom in a lot of those OIH baskets, along with the price of oil coming up. So that, and along with uranium, I kind of just focus on like that aspect because it's more ESG, I guess. And I kind of see those two areas of energy really being the place to be. Like if I had to like put my money somewhere, go to sleep like Sleeping Beauty, and wake up like a couple years later and feel fine with where my money is, it's probably going to be somewhere in energy. Yeah.
Yeah, actually, I'd have to agree with that. I'll share a few charts that Doc just said so that everyone's watching the charts. So we mentioned about OIH. This is VanEck Oil Services ETF. Actually, it's been a great consolidation for about a year already, since 2021. Can anyone see my chart? Yeah, I'm sharing the charts. So he's sharing this name. 180 is actually 210. You'll notice that perhaps for 2022, the hiding place, or where cash is going, since cash isn't just gonna just short growth stocks like ARK. One of them would just be shorting growth. That's fine. That's like a consensus call for everyone. And then those who are long are probably gonna look into energy. That seems to get a lot of love. It could go sideways if ever, like if there's a resistance at 240. But at the very least, OAH does have a lot of supports. Been actually checking Chinese names as well. When you shared your bullishness in energy, take a look at PetroChina. Actually, PetroChina has been on an uptrend. And for the last 5 days as well, from about 350, hitting about 370, we can see a clear pattern here. Actually, PetroChina is just in an uptrend channel, trying to reverse about 7-8 years of declines. I mean, from 2014.
There's another one I got into lead call options on. It's called CPG. That's China. I bought it like last year.
CPG.
And I was just looking at that. Yeah. Let me take a look at that one.
Wow. Yeah. Seems to have been reversing indeed. Yeah. So I think like even from a chart pattern perspective, this is like a huge reversal to the breakout to the upside. Yeah.
And I think like that's what I'm talking about. Like you have to like just imagine ARK, but just like that right now, it's like at that puke end of it. And that's over several, it's over a long period of time. And so you kind of like looking for that.
So more like the Occidental Petroleum, perhaps. Yeah. So what we're looking at in terms of bullishness is, I would agree with that. Actually, I've been looking at many charts. Energy names have been really the ones that I'm seeing a rotation to, mostly energy names. So whether it be the ExxonMobil, the Chevron, looking as well on Berry Petroleum. I haven't studied the company per se, but the charts are already showing that rotation flow. Energy names indeed have that love. Anyone here has any other sector aside from energy names that they're bullish upon? Like, is there, sorry for the noise at home. Go ahead.
I'm very, well, I'm bullish on on energy, like say BP is a good play also in the energy. But I'm also looking into basic materials and specialty chemicals. For example, I'm looking into LIB as a company. I'm also looking into PPG. All the basic materials. I think it will be a nice place to park the money, and also they are dividend plays. I know that we are not so used to dividend plays, but I'm really bullish in basic materials and energy sectors. And in basic materials, I'm looking into, as I mentioned, LIB. I think it will be a good play.
Sorry, can you repeat what basic material? ALP?
LIB. LYB. Excuse me. LYB.
Yeah. NYP. Okay.
L,
is this in Europe?
LYB.
I don't know. Can like
L?
Let me just write it here. Yeah, can you type it in? Sorry. I don't know the name of the basic materials, basically. Basic materials and energy commodities.
Yep.
Nikki, what are your thoughts about
so
what are your thoughts about like that switching over, like that mindset to dividend investing? Because clearly, like that's probably going to pay off. And you're probably going to have a run up in a lot of dividend. And I've held like, I think like my favorite dividend stock is like Krispy Kreme donuts, just because Krispy Kreme donuts. But I've also owned like Navient and AT&T for a while, and I'm starting to see like a lot of bullish momentum in those too. And so I guess, I don't think it's a bad idea, to search out, because you could see, I mean, you're not going to see like this high beta movement in those kind of stocks, but they're paying out dividends. So all things being equal.
Yeah, actually, speaking of dividends, you're right. I've been checking out, because AT&T actually bottomed here at 22. Anyone's seen the chart? So AT&T did bottom here at 22, rallied 26 already. That's about 20% of upside since December. So we're really clearly seeing a shift towards energy and dividends, seeing all-time highs, obviously, from the likes of Coca-Cola and Pepsi.
You know what got me bullish on AT&T?
What? HBO Max.
HBO Max. I love HBO Max. Like, I look for these things. Like I love they have Succession, and like I'm like on the 4th season of Sopranos, and they never run out of great stuff to watch. I don't know how HBO is not gonna fail. It's not.
Okay. So I've been bullish on AT&T simply because of HBO Max. That's really the only reason why. But I also know they've paid so much. Go, Martha. Yeah. Sorry.
Yeah. Did you see the jump in Discovery share last week?
Yeah,
I think it was 17% last week, because they finally announced, I think, the date of the merger for HBO Max.
Okay. All right. Yeah. Good. Looks like it did break out. $30.
Yeah.
From 24 to 30.
Yep.
Yeah. Okay. Good. I mean,
was that the Bill Wong? Was that the Wong dip there? Like that huge, like, you see like those red Darth Maul candles there? Remember that when Bill Wong was like, he just like had to close everything out?
Yeah. This one is the Bill Wong, $70 to 44.
Those are nasty. Those are nasty candles. Those are nasty.
This was it. This was the Bill Huang incident, 80 to 40 in 3 days' time to 36.
That's gross.
Yeah. And then it just left all the way.
Yeah, but you have a little accumulation right there too.
So speaking of Bill Huang, can we talk about margin debt? I think that's something to keep in mind. I posted some charts in quick trades, but this is something to keep in mind when again, it's important to notice when interest rates rise, the cost to service debt, it becomes more expensive. And also margin debt becomes more expensive, right? Because rates are rising. So that's why we see a lot of small caps that are unprofitable. All the biotech stocks that are not making any money just got killed because the cost of servicing their debt is so expensive. So if you look at the charts that I put in quick trades,
Yeah.
We
Right.
see a decline of margin debt year over year.
Mhm.
We're record margin debt because so much liquidity was put into the system by the Fed. You see from the March 2020 crash, we had margin debt of about 475 billion, and then it went all the way up to 875 billion. So now we just saw a decline just happened recently the past few months here in the chart, and you can see that when margin debt starts to contract, liquidity gets pulled out the system literally, right? So that means
Mhm.
that the market will have to adjust, and that's why a lot of these names have been priced to perfection and went up so much, so like 50 times multiples and so on, is because a lot of people are more margin. I mean, look at what Bill Hwang did to the companies he was in, right?
Yeah.
VIPS, right? Viacom. Like, it's
Yep.
insane how much he ran those companies up. I mean, he was like over leveraged like 20 billion or something,
Mhm.
like crazy amount. So how much margin is in the system? We know the total amounts based on these charts. But when the margin starts to get removed, because we start seeing sell-offs and margin calls, it could cause a very negative feedback loop, and then it will cause a nice oversold condition. And that's why I was very bearish on C. If you guys remember when C was like 250,
Yeah.
I
Yeah.
was like, oh,
Yeah, yeah, that was
it's
a
gonna
good
hit
call.
Can
200 or
go
less,
below 200. Yeah.
because they're losing 2 billion and making 8 billion. I mean, they're growing great though. It's a fantastic company long term for sure.
But it's
Mhm.
But I
leverage.
knew short term that they were going to struggle,
Okay.
because that's what margin and higher rates do to a growth stock like C, for example. So I think that's something to keep in mind. So what I'm saying is, like, we don't know like how oversold it can get. It's been a lot of selling already. In my opinion, I think more selling is going to happen. Any rallies will be sold within the next 2 months. We have
Mhm.
FOMC coming up January 25th. We have a bunch of Fed meetings this week. We have operations expiration mid January, and I think the bottom, or like a buyable dip, will probably be around February. Just, I'm not trying to prognosticate. I'm not a fortune teller, but I
It's
do
okay.
know that this market's also very gamma driven. So I've been talking a lot about that in quick trades. Like, the options
Mhm.
market is bigger than the stock market. I mean, you think about like the number of option contracts being bought, the delta and the price of those options actually bigger than the moves of people buying the stock, which is, to me, that's just insane.
Yeah.
It's never happened before, by the way. So that's why you
Mhm.
see these crazy rallies, these crazy rips, these crazy short coverings. You see the fluctuation of these prices just go crazy. It's because, one, we're at record highs for margin debt, and two, we've never been record high options like flows before like this either. And that's even more leverage on top of it. So that's what I mean. Like, we could see a crazy unwind where Bill Hwang was like a dress rehearsal. Like, I
Okay.
remember saying that, like, it was a dress
Yeah.
rehearsal. So I'm not saying
Mhm.
like the whole
Yeah,
market's going to crash. Like, that's
yeah,
not going to happen, because like the economy is strong. There's a
yeah.
lot of positive things. It's not going to happen, by the way.
Mhm.
But we have to see like a really serious recession or financial instability. And one last thing I want to add is, like, the end of a bull market always ends with like the financial companies at the top of the market cap. So we're going to see, like, if you see the weekly candle on an XLF,
Mhm.
Mhm.
there's a fat green candle just last week. That, I
Mhm.
mean, they're going to
Yeah.
put money into financials and banks, right? And then that's going to basically signal like that market top is when the financials are like worth so much more because of the raising rates. And then we're going to have like a recession come into play, but we don't know what year that will happen. So, like, that's why 2022 2023 is very tricky and very choppy. We have to keep reading the data and follow the price action.
Okay, got it.
One,
So
I have one quick question, and maybe you guys don't know the answer to this. So, I've looked through ARK and like how they purchase their shares, and I never quite understood like how much of like those buys that they post, like how much of those are options, um, and because they post everything daily, but hundreds of thousands of shares that they may buy in whatever company, but and if you look through, they buy, like, they trade options. So I don't know, are they just buying shares? Are they into options? So maybe Jeff has a better idea of how that potentially could impact things as well. Because if all these shares like that they're posting, oh, I bought 100,000 share, because they don't put the dollar amount either when they post
Right.
those. They just put the shares. So, you know, those could just as easily be 1,000 contracts, right? So I don't know how that kind of interplays with it. I don't really, you know, I'm not an expert by any means in like the options sort of vernacular and understanding. So maybe if you guys have thoughts about that, if that's the case.
I wasn't aware that that ARK was actually purchasing options.
Yeah,
So
it says on their sheet. It says we can trade and they can do second.
I didn't know that either.
I thought they were just purely shares.
No,
if they
no,
had
on
options,
there that they trade
they should
options.
be buying puts on themselves.
Hedge.
They're owning, yeah.
What if they're posting they bought all these shares, but what they're doing is selling puts?
They're selling puts. I wasn't really aware.
Like they're saying we're buying these shares, but really they're selling puts to buy them.
I do agree with what
people don't think about that stuff.
Margin debt is indeed good warning, because indeed the leverage hasn't really been stopped. So if we have like a Bill Huang event, that's gonna be a huge risk to hit that downside in the market, like a 40-50% crash, simply because a lot of hedge funds are actually bigger than Cathy Wood, that are actually more leveraged. Because I mean, who knew about Bill Huang until it imploded? So there's probably like a lot of skeletons. We don't even know how much margin the other hedge funds have. It's probably gonna blow up this year. Could be. You think like I just have a question. Do you think like people are asking, when do you think crypto bottoms out? 2023? Is it? I mean, I have a very bearish view. I think like this year, what happened with growth stocks last year, it's likely gonna happen this year for like for cryptocurrencies. Anyone here has any opinion, or like well, crypto is crypto, doesn't have to follow. What do you think? Anyone here follow, or we just go?
I mean, you guys already know I love crypto. You know, I think it's the future, 100%. I think if you found, I know a lot of people try to compare the market to like the .com bubble, but I don't think the market necessarily, because a lot of these tech things are actual reality money making companies now. They're just overvalued, right? Whereas during the .com bubble, you had these, you know, shell companies that weren't really making money. It was just an idea. So I guess I would equate crypto more to like that sort of .com mentality. So I do think that the crypto market will mirror the equity market in terms that we'll see a melt up going into the spring, and then we'll see a prolonged bear market probably out through the next halving in like 2024. So yeah, that's kind of my thoughts about it. I don't know when, you know, it could be a slow bleed out from here. But I don't see a lot of like, I think what I see with Bitcoin, I see some range trading going on, from like 30, probably, you know, back up to like 50, maybe even ultimate new highs, but not too high. But I think you're going to see like that ping ponging before we, you know, just go into like a prolonged bear market, sometime this summer or something like that. So, yeah.
Yeah, I think if you look at crypto, it's there's a funny video where this guy was like talking about why you should never buy Bitcoin. He's like, oh, it was $1 here, then it goes to 10, then it crashes to $2. Oh, it was $5 here, it goes to 10, and then it crashes to. So he basically said Bitcoin always crashes, so you should never buy it. And then now Bitcoin's worth over, you know, 40,000, whatever.
Yeah.
So basically with crypto, there's a lot of speculation. Margin is a big reason why it moves so much, because a lot of these, FTX is a sponsor for Team SolarMint, which is the company I work at. And there's a lot of these exchange companies that allow 100x margin for crypto. It's pretty crazy how much margin they allow. They've been pulling some of it back a little bit, but there's still a shit ton, excuse my French, of margin in crypto. And that's why you see such drastic, even crazier moves in crypto than like growth stocks, right? So if I were to say, okay, it normally will correct about 50%. Normally that's normally the case. When crypto hit, the total crypto market cap hit 3 trillion in November 8, right? Just recently, that was the top. And then it then went all the way down to 1.9 trillion now. So I would say could it go down to 1.5 trillion potentially? We don't know, but it looks like it's going through like a stage 4 decline as well. You can see if you look at the weekly chart, there's a lot of red candles. Again, the weekly chart really gives perspective, and it shows you the institutional footprints, and there's a lot of massive red candles showing up. So until that red candle dissipates, where the volume of the selling it gets lower and lower, lower volume, then I think crypto will start to kind of find a bottom, I would say. So that's just kind of my thoughts on crypto, so I think it does have more downside to go because it's broken some critical supports already from the previous few months. But long term, with NFTs and all, which is a bubble right now. NFTs is literally a bubble right now. However, with the utility of blockchain and crypto, I think long term, that 3 trillion market cap will easily be 10 trillion. So if you think looking at like a decade.
But this is the problem, like with what you were talking about with the level of leverage in the crypto market.
It's
like
crazy.
you can
Crazy.
you can't look at it like a regular market, because they can send it down to 25 or whatever, and then they'll send it right back up to 70K. Like, like the market makers, like they have so much power in it. I do think, like, a lot of the huge whales, I think, if you look at Glassnodes, a lot of them have left the market. Like, there's no denying that. I don't know how much of the Bitcoin is owned off exchange. Like Sailor, I think they all buy their Bitcoin off exchange, so you don't even see it like in those Glassnodes. But those are still wallets out there of huge whales, and there's no denying that those 1,000 to 10,000 Bitcoin wallets have they've gone down, and they haven't come back up at any point. So the market makers right now are making the market, and they're just flushing out liquidity, and you have to cover it. It's not like regular margin, like as soon as it hits that,
No.
like it just covers. Like there's no delay in that. So that's kind of like the problem with it, I think, and that's why I think it's going to be more of like a range trade before we actually get like the bear market kind of thing. Yeah. So, but and I'll say one more thing about crypto. I think you have this unique situation where you have an asset, and I kind of look at it more from a fundamental basis, where I do believe, that our ability to communicate and identify ourselves, show your vaccine card, your driver's license, send money to wherever you go to the restaurant and pay your bill, all of that I think is going to be Web 3.0 based, right? So I don't think there's any denying that that's going to happen. So I'm looking at what projects are providing sort of that scalability and are being built on by developers. And I don't think there's any doubt, like you look at Ethereum, Solana, the Lightning Network, Avalanche, a lot of those sort of projects. And then, so you can kind of look at it like through that lens and just be like constantly dollar cost averaging in on it, thinking like in the back of your head, this is Microsoft, Apple, Google, whatever, in 10 years. Or the beautiful thing about it as well is there's a lot of, there's dividends that are being paid as well through a lot of these by staking. A lot of these have, astronomical APYs. So there's kind of two approaches. If you're a value investor, you can be invested in crypto because you're getting return on it as well through staking and things like that. So I think there's a little bit for everybody, and I certainly think from a fundamental level, I don't think people, they've done a very good job, and I don't know if this is like mainstream media or maybe this is how things get influenced, but they've done a very good job of making people fearful and looking at this as like some high risk asset. And it is a high risk asset if you're getting into like, Shiba, shit coin a XYZ. But if you're looking at it from like a fundamental level and you're like, is this project scalable? Is this project low cost? You can invest in it, right? So yeah, that's kind of how I look at it.
You're mute.
Pardon, yeah. So good thing. Okay, let's wrap things up. We've got about about 5 minutes each for each person. Just want you guys to give like what is it that you would buy and you wouldn't buy, or like what would you buy and what would you short. And then just one asset is fine. So if it's financials for Jeff, well, you could say any asset you wish. It's okay. And then I'll just summarize whatever I've learned in today's topic. I've learned a lot actually from your ideas. Who wants to go first? Like, what would you buy and what you won't buy? So 5 minutes or less. I mean, if you can answer like in 1 minute, that's fine. If you wish to expound, go ahead. Go, Jeff. I think that you're gonna say something related to financials. Go
Yeah,
ahead. What would you buy?
there's so many companies. What I would buy is companies that I love,
Mhm.
so that I believe in. Like Matterport is one that I started averaging into. I'm already down from that position, but it's fine. But Matterport is the one, that I see. Like any companies that where I have a real life experience with. We're looking at wedding venues with my fiance, and then Matterport was being used. I was like, this is freaking amazing. So they're really literally bringing the metaverse to life. So Matterport is one. They're growing great. Of course, they're more speculative because of their debt and growth rates. But that's a company. Of course. There's so many, like Etsy, I think has way more to grow. If you think about the creator economy and how so many more people are creating and selling things that they're making online. We're going to be this whole theme of decentralization, not only with crypto, but you look at like how more and more people have the technology to build their own businesses successfully on their own. Because I work with a lot of YouTubers and Twitch streamers and stuff like that, and they're just literally their own businesses where they have full-time staff. So any of those companies that support um, this macro theme of how more and more of life is going to go digital. Other companies that I'm really bullish on is Axon. I love their mission statement. They're one that I just like my new C is what I call it. Is like I discovered them when they were like $55, but Axon, their mission is protect life, and they want to eliminate guns, and they have a subscription business now, cloud, SaaS, all that, and their margins just getting better, their cash flow is getting better. So I think long term, and they haven't even expanded internationally. So there's like a lot of, I don't want to go over too many companies, but in general, just basically I'm gonna just focus on what I love, what I believe in long term. Solana is another one. FTX is our sponsor, but I have Solana. So if it drops to $100 or 50, who knows? That's a great buying opportunity to be long Solana, because I think that they're superior when it comes to gas fees and so on. When you think about NFTs and the whole blockchain, and the underlying technology needed to operate all of these really cool innovative things happening with like
And
play to
they're
earn and
and they're
so on.
like the number one core developed. Like there's no
Yeah,
other
yeah.
blockchain
There's a
that's
lot of
been
developers on
developed
like
on
we're
more
yeah I
than
know
Solana.
Yeah, I
Yeah.
know a lot of companies developing on Solana. So like that's another one, right? 'Cause these are all areas I know. I'm not going to invest in anything I do not know. So I think that's very important. But like just look at this as a way to like get your favorite companies on sale, like Shopify. All these companies like Cloudflare. Cloudflare is going to continue to be huge, right? Net. So when these companies come on sale, those are ones I'm looking at. For the short term, though, yes, I'm going to ride recovery, cyclicals, financials, and I'm not going to hold them because like they're going to run because it is the macro environment, given the Fed and interest rates. So I'll be playing kind of short term on those stocks and not holding long term like Matterport and these companies that I love. So that's kind of like my strategy right now. And then I'm gonna take my I'm gonna take my time. Too often when we see something drop 10 or 20%, we're like, oh my god, it's on sale, and we jump in right away, and then oh my god, it drops another 20%. You're just like, okay, I average in more then. So I'm gonna take my time and take it slow and just dollar cost average over the next 2 years, honestly, into these companies because they're all going to keep growing. Like the trend's not going to change. EVs, like look at Tesla's earnings report, it was fantastic. They blew out estimates. I want to buy Tesla, and it takes 1 year to try to get the Model Y, which is to me crazy. Like I'm just like this is they raise prices in China. Like the demand for Tesla is just off the chart. So that's why their valuation reflects that. So these like massive trends that Nikki talks about in Awesome 10X, they're going to continue to happen, right? Nothing's going to stop the interest rates. It doesn't matter. Like we're going to move towards more EV and all this stuff. So just stay long, that macro theme, but take your time when it comes to, or I'm taking my time buying and averaging in because I'm kind of, I don't know how low things can go, and that's kind of my perspective for this year.
Who wants to be next after Jeff? Learned a lot.
Okay, let me
Go, Martha.
Well, for me in the short term, I'm going to be in the search of dividend plays, and mostly in the basic materials and the energy sector. Like I mentioned, specialty chemicals, like for example PPG, Dow, Lyondell, Basel, and in the energy sector, BP, whatever. That's what I want to do in the short term. But in the long run, I'm a big fan of Palantir. For me, it's gonna be one of the, if not the best company. I love what they do. Another great company that I do not own, but I want to start accumulating is Mercado Libre. I'm a huge customer of Mercado Libre, living here in Mexico. It's awesome. It will be for me Palantir, Mercado Libre. I love also Axon. Their mission statement is great, protecting lives. I really like Axon. Matterport I also love, and the other one that I really like is SoFi. I really like their mission statement. It's so powerful for me. Like, make your money right. It's for me, and I do like Anthony Noto, the CEO. So for me, Mercado Libre, Palantir, Matterport are one of my growth plays that I do want to hold. But in the short term, play the safe side, dividend stocks in the materials and energy sector. I think that will be the safest play for me to do.
Got it. So I'll hunt for those devs. Last, go Doc.
Yeah. So
go.
So I kind of talked about before, like if I had to put my money somewhere and go to sleep, it would be in uranium. So I think Quad U, U. I see a tremendous multi-year accumulation on that, and they're balling in terms of like their ability to produce and develop uranium. So I think if you had to make a sort of higher payoff, moderate risk play on uranium, I think that's the one. Otherwise, I would go CCJ, which is Cameco. So yeah, I do think that e-commerce is going to continue to outperform in terms of like some of the tech stocks. So you talked about Mercado Libre. I haven't really done like a deep dive into it, but I've gotten to know Coupang really well, and I really love that company. And I think you're kind of getting in on the ground floor with that one. I think Amazon. I actually think that's going to be probably one of the top FANG performers this year. And then, so as far as EV, yeah, I think you really do have to wait for the bottom on stuff like Tesla. But Rivian, I do think that you're kind of getting on the ground floor of something that can be quite tremendous. And then also Volkswagen, I've looked into like what they're doing with their EV, and they've really put a lot in. Like, if you had to pick out a company, that is like a traditional auto company that has really put like their best foot forward in terms of like advancing into EV, I think it's Volkswagen. It's not Ford, GM, or anybody like that. I think it's Volkswagen. So in terms of like a longer term AI, I think is definitely a place where you want to be. Martha talked about Palantir. I'm a huge holder of Palantir. I basically dollar cost average into it. There's a smaller cap company that's a little bit more higher risk that may have like a sort of potentially like a 10 to 100x payoff on it. It's called Big Bear AI. So they have a lot of contracts in the DC area and through the military, and they have some partnerships with Palantir as well. So I kind of like what they're doing there. Sort of more speculative play. But I think if you're looking at just making money, I would echo what Martha said. If you need to have income this year, I would really look at dividend stocks. And I love, when I look at dividend, I hate holding like these boomer stocks. So if I'm going to hold it, like I'm going to own something that I really love. So you got to own, for me, I got to own Krispy Kreme, right? and HBO Plus. So AT&T. So there's a beer company in Brazil that I really like, and I do think Brazil got pounded down. It's called NBev. ABV. They have a really good dividend. They have like a 4% dividend. And I think there's a lot of room to move up on those. So as far as going short, I mean, I think with the only certainty with shorting right now, you could say, is tech, right? Like if you're just like going straight, I'm like a year from now, I got to put, and I'm hoping to cash it. I would just fade the NASDAQ. And then I would also fade bonds as well, So you can do TBT is the bond shorting ETF. So, yeah.
I learned a lot. Let me just summarize the charts they've all shared. What T just shared is TBT. So this is TBT. You could see that indeed treasuries are getting shorted. I'll follow that short tech, fade NASDAQ. We can clearly see that the NASDAQ is indeed topping out here. So your NASDAQ could fall, even if everybody loves Microsofts and Amazons. I'll go with the T as well, shorting the tech by fading the NASDAQ. I'd agree with Martha in the dividend plays, energy. I'm not yet sure about this, but I'll be checking Petro China for myself. I've been checking on dividend plays like China Mobile. Also going quite long. Personally, I'm going long on China values. So I'm getting in on Alibaba. That to me is more of a short-term trade indeed. But I think that we're already seeing that consolidation that he was saying. I like how they both mentioned like Martha and well, I think everyone loves Palantir. But I agree with everyone. Like for all we know, it could fall 70% lower or 80% lower from its peak, and that would see Palantir near 10 or 12, right? So I'll be a little bit careful. I think personally, for the year, I'll have to just go with the consensus really is that you want to wait to short high growth stocks. You still want to short them. So I'll fade as much as possible technology, even especially like cybersecurity. So I plan to short. I think like for 2022, I would personally go more bearish than normal. Like I'll actively find a lot of short ideas, mostly put options. I'll try to reevaluate. And then in terms of longs, I'd agree with Jeff. I mean, in the Philippines, for instance, he mentioned about Maniport. To be honest, in the Philippines, a lot of furniture stores today, I think a lot of real estate indeed has found a niche in VR. But the thing about it is that we could be very early. So like even if I believe that there is a value on Matterport, I think currently all the SPACs have always gone $5. Like take Matterport right now is still trading at about 15 or 17, I think. So I personally would still be bearish on SPACs. I was wrong in thinking that there will be a bottom somewhere at 10 and seeing them go 5. Not that I'd see it go to 3 or 2. I just think that it's going to be a 1 year to 2 year consolidation for SPACs. Mm-hmm. So there is no point. Like what you'll see is that 5 is going to be 5. So what's the point of holding a $5 forever? So yeah, I learned a lot. I think like I'll just echo everyone's views to go long on commodities. So for tea, it's uranium. I personally don't know which commodity I'm going to be very bullish upon this year. Could be oil. I guess I'll stick with energy, traditional oil, simply because
I really like copper and uranium.
Copper for you for commodity.
Like as far as a hard commodity, yeah.
I'll search on which commodity, but I'll agree with the theme of basic materials, energy, and commodities. Dividends. I think like the only reason people really flocked in financials was dividends. So I'll find a name that I like fundamentally that also sports good divs. Like it could be something like the likes of HBO Max, like AT&T, or just traditional. Because in the Philippines, I usually just go for telecom. So I'll probably find some telecom in the world. I don't know. Maybe it's a traditional firm like an Ericsson or Nokia. For all you know, I still haven't. But I do know that 2022 it's gonna be a year where you do have to stick to some value names. Value meaning anything that gives dividends. I think like for me, there's no such thing as value when it's like um 50 times PNG. Like, it's not value. Like people are hiding in consumer staples and they're talking about growth and value at the same time. Like what type of growth are we talking about in a Unilever or a Procter and
Mm.
Gamble? I mean, I don't understand all the money going into the Unilevers and the Colgate Palmolives of the world. So yeah. So I have to still that said, I was happy to hear that Jeff still likes C Limited. I think like in the Philippines, we I think like C Limited is still one of my top picks. Like if I had to choose, it's
Yeah.
probably in my top three, still in my top three, no
I
matter
always feel
what.
like the companies, like you really have to look at the founders and like who's running the company, and I mean you just so impressed, Forrest
I
Lee.
think like
Yeah,
the fundamentals really never changed. But
yeah.
I agree with the fact that because probably there's leverage in the system and there's a lot of people who are really, putting on a lot of put options, which will detriment the short-term effects of these growth names.
Hmm.
It's likely that they could fall 70% out of no reason. We've seen it already happen for Zoom video. It's not as if like for the last 3 quarters that Zoom has been like burning cash. They
What do
weren't.
you,
They were actually free cash flow positive. Like from 40 times where it's now
Yeah,
already
that's what
30
Kathy said
million worth of
actually.
sales. You
Kathy
know,
mentioned Zoom specifically, saying they grew 300% year over year,
in
and
the
then on
last
top
year.
of that, they grew 20% on top of that growth, and
Yeah.
they have so much cash. So she's like, they're not going away. It's not a stay-at-home stock. It's a
Stay
feature of work.
essential name.
Yeah, it's a feature
Stay
of work
connected.
stock. So
Stay connected.
Stay connected name.
yeah,
Yeah. So like I think like I might
Stay
be a
connected.
little bit contrarian when it comes to like ideas like C Limited and Palantir and Zoom video. Only, but I would be cautious, meaning I think like for the year I do some covered calls just in case, just in case it slides even further. So
can
I'm
I
gonna
throw out one? Can I
go
throw
go
out one? Sorry, I know I'm like prolonging this.
go.
Um, so metaverse wise, like I really like Unity, and I
Mm,
managed to get it when it like puked down to like $60 or whatever it
yeah,
was over, and but I had to sell it, after just like it
yeah.
went crazy. So I'm kind of like looking at that, but I don't know. I feel like it could be like one of these Nvidias or like Shopify or Trade Desk that just continues to go nuts, and you're like, damn, I missed it. So I'm not quite sure where you guys are at with that one. And then Roblox as well is kind of like the other metaverse area that I'm like, this could like legitimately, they can build something here.
I think everyone who shorted metaverse names today are correct. But the problem is that the fundamentals really never really deteriorated. So I
Yeah.
think like come this Feb or March, when Unity and Roblox actually surprises with tremendous growth, I just don't know their reaction. Growth wise, I know it's there, especially like everyone's in Roblox. I mean, if you're a parent, like I have family and friends who are always ordering from Roblox. So like even in like you can see it's an international name, it's a global name,
Yeah.
both Unity and Roblox. So the sell-off on Metaverse, I think, had to do with the hype involved. As to how fast hype can die down, is it going to take a year? I think the thing about 2022 is that Facebook, aka Meta platforms, would never stop in the headlines hyping Metaverse on and on, whether it's their quarterly season earnings calls or their updates. I think like by June or July, I think Jeff knows this better. Horizon, aka Oculus VR, did very well in December. So I think everyone's already assuming that Facebook as a FANG name this year. I mean, I think you mentioned Amazon. I think like for this year alone, for 2022, I think it's gonna be Meta platforms here among the FANGs. I mean, it's probably not gonna be Tesla's year anymore because Tesla's really
Hmm.
had a very good 2020, 2021.
Hmm.
So I don't know. I think for the next 2 to 3 years, I think 2022 to 23 at the very least, you'll hear in the headlines Zuckerberg, but mostly about Meta. And every time it talks about metaverse, you'll just get a pop on Unity and Roblox, wherever they may be. If they're trading at 90, then it's gonna go 100. If they're trading 120, they'll go up 140. I just think that each time a company in the metaverse discusses their plans, whether it's profitable or not, because chances are they're not yet profitable on that front, it's fine. Like I think that the market will give it a free pass because there are more believers on metaverse than growth stocks. Like just that theme alone, I think like it outpaces the, like you've got the Nvidias and the Googles all behind it. So it's bigger than Cathy Wood. It's bigger than this macro narrative. So I'd say that the metaverse place, whether that be Unity or Roblox or whatever people really think about, which is going to benefit. Let's say they just have a traditional thinking that's going to be Nvidia or just Facebook. I still think that there will always be a bid no matter what. But these funds, they also know how hard things are, so they'll be probably just trading the ranges. Or I mean, it's not going to be like in 70% sell off. That's just what I think when it comes to Unity and Roblox.
Yeah, I agree.
Okay, like it's been an hour, guys. I think like it took a lot of your time. This was a great session. I learned a lot. I'll be actually studying more of the recommendations, dividends, basic materials. I'll study it deeper, learn a lot on the margin to really take advantage of the overall put options right now in the market.
Can I just tell you guys a joke?
What?
What do you get? What do you get when you crash a Kia?
Anyone
you
has?
You get a Nokia.
That's a good joke. Can I share like the next 2 months, because I think that we're gonna see a bottom. The banks are reporting earnings, by the way. They're gonna be fantastic, and with interest rates rising, like Citigroup and you look at the flows of Bank of America, Citigroup, JP Morgan. The past week is massive inflows, so that's gonna continue. CPI prints on Wednesday, and producer price index prints. It's gonna be pretty high. And then FOMC is on January 25th. So we could see like some pretty like everyone's saying here, high growth can continue to see a lot more pain. And the word how I look at the bottom is I look at put call ratio. When the put call ratio reaches over 1, so basically it's puts divided by calls. If it goes over 1, that's an oversold indicator. Also max pain. There's a fear sentiment indicator on CNN that they use, that once it goes to like extreme like fear, then normally it signals like a short-term bottom. So there's a lot of indicators that I could use where I'll start to average in more heavily. And I think that's probably going to happen around FOMC in January, because they're going to start to discount and price in, all this inflation, interest rates hike, and the banks will report really stellar earnings. And then guess what? We have another earnings season. So what happens? They sell everything down, make everyone sell their positions, right? Retail sells it. And then when the next earnings come, of course, UPST, Shopify, all these companies, they're going to report great earnings, right? The economy is still growing. We're growing at 4% this year. And we're not, it's not a recession yet. So that means that when the next earnings cycle comes, you're going to see them run them up again. And then when they do that, I'm going to go short again. So that's kind of like my view within the next 3 months here. And then just stay long financials, because they're going to run, like, these financials are going to probably go up to 20%, I would say, because of the amount of money they can make with interest rates, rising over time.
Yep.
Great. Okay, so we'll monitor those things, mostly backs, and short, whatever like Upstart does within the next few quarters, if they actually have a great number.
They probably will. I think they will. Yeah, they're helping so many banks do loans, and
yeah,
it's pretty cool. Yeah, we'll see. Upstart is one of my ones that I like a lot, but I don't know how low they go. They might go 105.
I was impressed.
Yeah, I get so much what do you call that, junk mail from Upstart. Like I have an Upstart thing in my mailbox like every other day, like trying to.
JP Morgan and Citi report next Friday, don't they, Jeff?
Yeah, the banks report starting this week. Yeah, they're going.
Yeah,
they kick off earnings this week.
Okay, I'll take into consideration bank numbers this week. All right, lots of economic data, lots of insights. Have to digest everything that you guys said. Looking forward for 2022. Hope that we do this session again. Let's see.
Yeah, it
Let's
was awesome. It was
have a
awesome seeing it. It
Yeah,
was
thank you.
really. This
Yeah, I
was
learned a
really.
lot
This was
too. I
really
learned a
nice
lot
and
too.
special for me to see.
Yeah, it's good because that way, like, we can evaluate our ideas and then probably
Yeah.
come to a better conclusion and have a better decision for our investments. Got it. Thank you. All right. Bye. Thanks, everyone. Bye.
Bye bye.
Thank you. Bye.